Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, September 10th, 2010. The US dollar weakened today against commodity-backed currencies such as the Australian and New Zealand dollars, as we had some positive Chinese economic data which fueled bets on currencies closely tied to the pace of global growth. The Chinese data, which we'll take a look at in a second, continued a rally sparked Thursday on the heels of better than expected economic data in the US and Australia, allaying some concerns that a global recovery could be slowing. In the Aussie-US dollar pair specifically, we saw the Aussie reclaim some late New York trading losses from yesterday, as well as some overnight losses after we had the release from China. We had this upward sloping trend line which connected some of our previous highs, and we see that just at the 0.92 level, which is also our 50-period moving average in this pair, we use that as support. When we come back from the weekend, we'll see if we manage to push above Thursday's high in this pair. Zooming out to a daily view, we see that we have some levels of resistance coming at the 0.94 level, which was our high for this year. So we'll see if we continue to see the Aussie's strong rally continue until we reach that level. Taking a look at a daily view of the New Zealand dollar, US dollar, similar to the Aussie, we've had a very strong run of gains. And here, though, we have some resistance levels that came from earlier in August and in late June, first at the 0.7350 level and then next at 0.74. So we'll see here if we have the risk sentiment continuing to improve, if we manage to keep moving higher. In today's session, we met resistance at around 0.73, which was our high we had set back in May, as well as this end of this rally here in the middle of July. So first we have to break above that level before we target the levels we just mentioned. Now, taking a look at the Chinese data that I had mentioned, we see that the trade surplus in the country narrowed on a stronger than expected increase in imports while export growth slowed. The first part, the increase in imports, boosted investor confidence that Chinese demand is holding up even as China has made moves to put brakes on its growth, but a decline in exports could mean that the global recovery is slowing. Investors will have a big batch of economic data coming out from China later today, including a look at inflation, industrial production, retail sales, and possibly bank lending. There is some speculation that the Chinese central bank may decide to raise interest rates if high inflation, or if growth so strong that it would be inconsistent with the growth's intention to cool off the economy shows up in that data. Separately today, we also had the Chinese yuan jump to a one-month high against the US dollar intraday after the People's Bank of China surprised the market by setting the dollar-yuan central parity rate at a record low. This move was likely an attempt to try to battle the very high inflation in the country. In Canada, meanwhile, employers added more jobs than forecast in August, and the unemployment rate rose as more people re-entered the workforce. Payrolls rose by 35.8 thousand jobs, the seventh gain in the last 8 months, following a drop of 9.3 thousand in July. The unemployment rate, meanwhile, rose to 8.1%. Separately, Bank of Canada Governor Carney, in a speech today, may have tried to signal that investors took the Wednesday policy statement from the Bank of Canada as too hawkish. The speech added commentary about significant concerns of the downside risks to the US and Canada economies, and it omitted discussion of the offsetting impact of exceptionally stimulative financial conditions. That's why if we take a look at the US dollar-Canadian dollar pair, which moved in favor of the Canadian dollar in Wednesday's session following that Bank of Canada interest rate statement, and hit a new low for the week below 1.03 following its employment report, we see that the Canadian dollar gave up these gains and the US dollar gained, pushing up to 1.0370. Carney's speech fed speculation that perhaps the Bank of Canada will hold rates steady in its next policy meeting and perhaps even the meeting after that, as it waits for incoming data in order to get clarity about the US outlook. Turning to the euro-dollar pair, we see that the euro rode the wave of risk appetite in overnight trading on the back of the Chinese trade data, rallied but then was unable to move above the 1.2750 area and gave up some of its gains during the New York session. However, overall, we remain pretty much in the same range that we had seen during the previous two sessions, so we continue to move sideways in this pair following our decline in Tuesday's session. We do have international banking regulators meet this weekend in Basel, Switzerland, which may shed more light on what changes may be coming for big financial institutions. And so, since we do have concerns building over the health of the European banking sector, this could have played a role in capping euro gains. So we'll see if there are any developments coming out of the weekend from that meeting. The dollar-yen pair moved higher overnight and then again in New York trading, establishing a short-term upward channel during the last 3 sessions. The dollar gained against the yen on a day when Japanese Prime Minister Naoto Kan called on other nations not to interfere with Japan's possible efforts to lower the yen should Tokyo decide to intervene in the market. Japan has been increasing the prospect of intervention in the currency market amid loud calls from exporters to act on the surging yen, which is sitting near a 15-year high against the dollar. Finally, in the pound-dollar pair, we see that the pound rallied during the European session, moving up to 1.5465, but following that it gave up that little surge and fell to its lowest in a few days. However, taking a look back at this pair, we see that throughout the last better part of the last 2 weeks, we remain in very sideways trading with our resistance around 1.5470 and support level around 1.5330. There are concerns about the UK economy as recent data points to a weakening recovery, and the central bank seems more concerned right now about stimulating growth rather than battling inflation, which could pressure the pound going forward. And that's the way we end the markets for this week. Let's take a look at the upcoming fundamental docket. First up, as I mentioned, we do have Chinese data including consumer prices, producer prices, industrial production, and retail sales. That'll be coming out over the weekend, so that could influence markets in early Sunday trading when the Forex markets reopen. Taking a look at the US releases that are on tap, we have a pretty busy week with retail sales, Empire Manufacturing Index, the industrial production, producer and consumer prices, weekly jobless claims, a look at treasury flows, the Philly Fed Index, as well as the UMich consumer sentiment. These releases should help to give a clearer picture of the state of consumers, manufacturing, and inflation in the US economy. Taking a look at the key releases from around the globe, we will get retail sales from New Zealand on Monday. The UK will post its consumer prices, its employment change for the month, as well as retail sales. And on Wednesday, we get the inflation report hearings. During these hearings, the Bank of England governor and other members of the BOE testify on inflation and the economic outlook before Parliament's Treasury Committee. Also next week, we get interest rate decisions from the Reserve Bank of New Zealand and the Swiss National Bank, though both are expected to hold rates steady. And that will wrap up our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you a great weekend.